We're going to compare the personal loans from LendingClub and Best Egg. We've spent years working in the lending industry and we track dozens of lenders. We want to break down these two lenders so that you can see which one might be better for your situation. The first thing that we're going to look at are the loan amounts that they offer. LendingClub's minimum loan amount is $1,000 and Best Egg's minimum is $2,000. If you need just a little bit of money to cover a short-term emergency, either of these lenders might be a good option. But I will highlight LendingClub because they offer more flexibility on the low end. If you are looking for a more substantial amount of money, LendingClub will lend as much as $40,000 and Best Egg will lend as much as $50,000. I will highlight Best Egg because they have the higher top amount. Loans from LendingClub have terms between 2 and 5 years. Best Egg's terms range from 3 to 5 years. I am a little bit worried about 3 years being the lowest term length. If you're borrowing less than, say, $3,000, you should try to avoid terms longer than 2 years. That's just too long to be paying interest for what should be a short-term loan. Now let's look at the cost of the loans. LendingClub's minimum APR is 8.98%, and Best Egg's minimum is 8.99%. That 0.01 percentage point is a meaningless difference. For instance, for a $10,000 loan that has a 4-year term, that amounts to less than $3 in interest expense. Now, if you can get a 9% interest rate right now, you're doing pretty well. So I will highlight both of them. But both companies have a maximum APR of 35.99%. There's really nothing interesting or special about that rate, so I won't highlight either one of them. LendingClub charges an origination fee that's between 3 and 8%. Best Egg's origination fee ranges between 0.99% up to 8.99%. A little more than half of the lenders that we track charge an origination fee. Now, any origination fee over 6% is getting to be on the high side, but 8 or 9% is still not even the highest in the industry. So these numbers aren't necessarily bad, but they also aren't great. So I will not highlight either one of them. But it's important to keep in mind that the origination fee is a percentage of the borrowed amount and comes out of the proceeds of the loan. So if you borrow $10,000 and have a 5% origination fee, you will receive $9,500, but you'll still need to repay the $10,000. Remember that the origination fee is accounted for in the APR. The APR is the origination fee plus the interest rate. All things being equal, you want a lower origination fee if you plan on paying your loan off early. Paying off early will save you on the interest that you would have paid, but you don't get a reimbursement for the origination fee. Both LendingClub and Best Egg targets borrowers who have fair credit scores. Based on my research, I believe that they lend to people with credit scores between 620 and 700. Of course, the lower down in the range that you go, the less likely you are to be approved. And these are just guidelines anyway. Lenders don't use credit score to determine eligibility. They will use information like payment history, debt-to-income ratios, utilization, income, and other financial information. The most common type of borrowing for personal loans is unsecured. This means that you don't have to put up any collateral to secure the loan. I like unsecured loans because additional financial setbacks are less likely to create the domino effect on your finances. LendingClub only offers unsecured loans. While unsecured loans are the most common forms of loan that Best Egg offers, they also offer secured loans. A secured loan is one where you put up collateral to guarantee the loan. The most common form of collateral is the title to your motor vehicle. If you have trouble repaying a secured loan, the company can repossess your collateral, in this case your automobile. This can make a bad financial situation much worse, but there are benefits to a secured loan. It's easier to be approved, get a larger loan amount, or get a lower APR. I will point out that Best Egg will also allow you to stack multiple Best Egg loans. Of course, we don't want to get buried in debt, but the ability to stack loans can mean that you can initially borrow the bare minimum of what you need, knowing that you could go back if you run into further trouble. So I am going to highlight Best Egg for having more flexibility in the types of loans that they offer. Neither LendingClub nor Best Egg will accept a cosigner on their loans. A cosigner is someone who agrees to pay off your loan if you fail to repay it. If you struggle to get approved for a loan, a cosigner can strengthen your application. Unfortunately, you would have to find a different lender if you need this option. If you are using the loan to consolidate credit card balances or other debt, both LendingClub and Best Egg will directly pay off those other creditors with the proceeds of the loan for you. It's convenient when a lender will do that, but it also shows that the lender understands that the loan will replace other debts and not just stack on top of them. Because of that, the new loan won't change your debt-to-income ratio. That should make it easier to be approved by them. It's good that they both offer it. If you are late on a payment, LendingClub will charge you either $15 or 5% of the late amount, whichever is greater. Best Egg will charge you a flat rate of $15. These are pretty standard rates, but I am going to highlight Best Egg because you never pay more than $15. So let's summarize the personal loans offered by LendingClub and Best Egg. LendingClub and Best Egg are pretty similar in their policies. LendingClub offers a slightly lower minimum loan amount, and Best Egg offers a slightly higher maximum loan amount. They have comparable APRs and origination fees. Best Egg does offer more types of loans, and they will both directly pay off your creditors if you're using them for debt consolidation. And Best Egg has a better late fee policy. All in all, I think either of these companies would be a good lender. But for many people, the most important thing about a loan is whether you can get the money that you need at the lowest possible APR. That's why we always recommend that before you accept a loan, you should shop around. Find the best deal. At the Yukon Project, we've tried to make shopping around easy. If you visit our marketplace page, you can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of the approved offers so that you can pick the loan that's best for you. If you have any questions about either one of these lenders that we didn't cover, leave a comment below and we'll try to get it answered. If you found this video useful, please like it and subscribe to our channel. Thanks for watching.